we have a lot of people we're talking to every day and pre-qualifying. So there's plenty of people who are out there still wanting to buy, even with the rates sitting where they're sitting. Just still lack of inventory, I think.
On this episode of the SLO County Real Estate Podcast with Hal Sweasey, dive into the turbulent mortgage market with Donna Lewis from Rate.com. Donna shares strategies to navigate rising rates, emphasizing why homeownership still trumps renting in today's economy. And she also reveals key trends impacting the market, from insurance shifts and credit score challenges to how tariffs could influence mortgage rates in the coming months. Team Sweasey also gets a call from a frustrated resident who has been on the sideline for way longer than she has expected. And we'll hear from Morgan before we get started with this episode of the SLO County Real Estate Podcast.
My name is Morgan, and I've been trying to break into the market for the past 18 months, but mortgage rates have been stubbornly high. What's the one move you'd tell a first-time homebuyer to make right now? Is there a hidden upside or a smart strategy that I might be overlooking? Do you know of any special programs? I was pre-approved for $700,000 18 months ago, but that doesn't buy much in SLO. Should I wait with the recent Fed news? Help, please.
Welcome everybody to beautiful San Luis Obispo for today's episode of the San Luis Obispo Real Estate Podcast with Mr. Hal Sweasey. How you doing, sir?
I am enjoying the spring weather.
It is. It's wonderful outside right now.
I'm ready for the hotter. Yeah, let's get it hotter.
Mr. Turner's with us. How are you, sir?
Great. Hal thinks it's the season is springtime, and those of us who know better know it's baseball season.
Well, that's true. Yeah.
Well, it's not spring ball, I guess, or is it spring ball?
What season is it?
Yeah.
It's baseball season.
Baseball season.
My bad, JT. Hal, we have an awesome guest with us today.
Yes.
Do you want to go ahead and introduce who we have?
Yes, we have a longtime seasoned mortgage specialist, Donna Lewis, with Rate Mortgage. Right?
You got it.
Yes.
Yeah.
Hey, just real quick. So you've been in San Luis Obispo how long?
40 years now, if I'm
We
doing
don't
my
have to
math
count them all up.
correctly.
You-
85 since
okay.
1985.
Mid-80s, yeah.
Went to
Moved
Cal
here
Poly.
when you were 3?
Yep.
Yeah, exactly. Sure.
Yeah. Good. Went to Cal Poly. And
Never
how long
left.
in the mortgage business?
33 years now.
Okay, that's longer than average.
Yeah.
Right? Good
Yeah.
for you.
Yeah.
Yeah. And the reason you're here is you do a great job for our clients. So
Thank you.
we have a nice little recording and question that came in. I guess, should we address that first, James?
Thank you for the question, Morgan. Appreciate that.
So I heard a few things in that. One was financing. So would we have any suggestions for Morgan in terms of helping her in her quest?
Morgan had called me. I'd be having her get an application filled out, lickety split, so I could actually really analyze what she has going on. It's hard to know when somebody has an experience and feels like, you know, they're not getting over the hump or able to kind of buy or qualify what they might like to. Consider options for her and alternatives like an ARM loan, so a loan fixed for a shorter period of time at a better rate that helps them qualify for a little bit more home.
Well, we have so many options right now, and even you were mentioning longer term loans, so you get your payment down.
Yeah, 40-year term with an interest-only feature sometimes is helpful to people, not only to help them qualify for a little more, but to keep their payment a bit lower and feel maybe a little more affordable, more comfortable.
Yeah, it sounded to me, John, like she was also feeling like she couldn't get what she wanted for her price. Yeah, maybe she wanted something better than that price range would allow her.
Yeah, and you know how aggressive I am on not waiting.
Right.
I mean, when has waiting for rates to go down ever been a strategy that, when you look backwards, worked out? And the answer is very rarely. I think we shared this a few weeks ago. If in 1971 you were going to wait for rates to go down, you'd have waited over 20 years. And in the meantime, property values went up about fourfold. So I'm not a fan of waiting because the rates are where they are. I'm a fan of finding the house that you like and working with a great lender like Donna and figuring out a creative way, as you just discussed, to get in the darn property now.
Yeah. Given all the resources, Donna, you can bring to bear and variable type loan programs to make it more palatable, maybe stretch a little bit, or, if she wants to be conservative, then sometimes she has to adjust her expectations.
100%.
So, do we not live in San Luis and go to a less expensive community? Do we maybe go, I wanted a home, but I'll settle, or not settle, but I'll accept a condo?
Yeah.
So there's always sacrifices. We talked about that the other day.
Yeah.
When you buy your first house. What is the mood out there in the mortgage, in your personal business? What are you seeing out there with all the changes and things happening today and a lot of unknown?
It's interesting. In our area, the pace of interested buyers has remained. I mean, we have a lot of people we're talking to every day and pre-qualifying. So there's plenty of people who are out there still wanting to buy, even with the rates sitting where they're sitting. Just still lack of inventory, I think.
Right.
You know, so that's probably one of the bigger challenges. But I think people have gotten over the hump of rates having come up and come to the reality party and realize that this is where they are, and you know, they're still anxious to buy.
We may not ever see 3 again in our lifetime. So 6 looks pretty darn good right now, doesn't it?
It doesn't look so bad when you look at rates historically.
Right. So I think, you know, we were in a meeting yesterday with the CEO of Keller Williams, and, you know, he was talking about kind of what if rates did, you know, because they kissed 6, you know, 6 months ago. What if we were to get to 6 by summertime, and what would that do to your activity, to Hal's activity in the marketplace? I think it would begin to ramp up.
Well, they're kissing 6 right now. Not 30-year rates, but ARM rates. So a 7.1 or 7.6 ARM, so a rate fixed for 7 years, which really is probably the longest most people hold a loan anyway.
Right.
They may live in a home longer than 7 years, but they often restructure debt for one reason or another. So a 7.1 ARM, I'm a huge fan of. I always have been. My husband and I have typically, for the most part, had 7.1 ARMs until rates dipped in the 2s. Then we refinanced, but
locked it in.
But yeah, we've always had adjustables for that reason, because they've always been priced so much better.
Yeah.
So
Rates fluctuate all the time, but 7-year versus 30-year, are you talking 1/10%, a quarter percent different?
3/8 to 0.5%.
Wow.
Could be $300 or $400 for,
Right.
you know, the average price range we see in San Luis Obispo.
Which might make the difference between qualifying and not, right?
Correct. Yeah.
And $400 every month for, you know, 4,800, 7 years. Yeah, that
Over
adds up.
7 years, it adds up. Even if rates were a little bit higher in 7 years and you were still in the same house, it wouldn't be the end of the world,
Right.
you know, because you would have saved so much in those first 7 years.
Yeah.
Right.
I think when you said the reality of the market and a reality of interest rates, I believe people are used to rates being 6 to 7%. And I don't see that as the shock. I think what holds people back is the hope they'll get lower, or maybe the fear that they might go higher. You know, who knows, right? We tried to guess rates for quite a while.
Oh, we still do.
We failed horribly.
We just haven't been right.
Yeah. Some of us more than others. Do you remember buying your first home?
I remember it vividly.
Vividly?
Yeah.
Was that first payment scary?
Yeah, a little bit. We bought our house at an auction. It was crazy.
Oh, you're
back in
you're
the day.
Crazy. First
back
house
in the
at
day,
an auction?
First house at an auction. Yeah.
Well, you've got more guts.
No guts, no glory, right?
Right?
Yeah. No. So that was a little scary, but we ended up better off than we thought we might in that process, and so the payment didn't end up being as scary as we thought. But that was a big leap to take, and it paid off big time.
And I don't want to put words in your mouth, but don't you think most buyers or borrowers, it's a stretch, and it's scary to buy that house, and then over time, 2, 3, 4 years later, I mean, what used to be a big challenge in their mind is not, and they're used to it.
My favorite exercise to do with a first-time home buyer is to walk them through the tax benefit of owning a home. I mean, anymore, especially in San Luis, rents are so high. Even if somebody's got decent rent right now, it doesn't last, right? Because your landlord decides to sell the property, or they want their own kid to move in, and suddenly you're displaced, and you have that sort of housing insecurity, and land in a payment for rent that is pretty much not far off from what you would have made in a mortgage payment. So it's a fun to show them how much tax savings they would benefit from if they, you know, had a mortgage instead of rent. And then also you're paying yourself, your piggy bank, basically paying down your mortgage instead of somebody else's, all the things. So
it is probably one of the best for savings plans. You know, like my parents are older, well, my father's still alive, but you know, the house is what he lives off of.
Yeah, for
the
sure.
proceeds of that house. Without that house, there wouldn't have been very much.
Yeah.
Right. So it's a big commitment to make.
Well, if you were fortunate enough to buy a house in California, you didn't have to be very smart, but the markets made us all look like we're geniuses, right? You know, we really know how to handle our money because our house went up 4 times. I don't know that it was luck, but I would also suggest to the younger people that the only way you can make a decision looking forward without a lot of information is look at history. Buying a house today is going to be a good thing. I mean, think about this. If the market were to completely go, and the house you bought today, 30 years from now, was worth nothing, you've got a free and clear place to live. Worst case scenario, you got a free place to live because it's paid for in 30 years.
I think the same is true with people who rent versus own. I think that's a big fear for first-time home buyers, is maybe not even rates being an obstacle, but is this the right time? Are values going to come down? Because, some of our kids lived through our being in the business and watching the market have a tough time in the early 2000s. But, I think the message there is you have a place to live, and you would have been paying rent. Rents didn't decline. In fact, rents went up during that time. Yeah. So you have a place to live, and you're still paying your mortgage down, and most often have the luxury of waiting that out and staying in the home. So,
And by the way, the place is yours. We rented for about 3 years while we were building a house. And my wife just hated it. And this was a house on the sand. Like, it was the best place we've ever lived. She hated it because it wasn't hers. I'm going to ask you the question that everybody asks you, and I know you don't want to answer it. What the heck's going to happen next with rates? I mean, what are you seeing? What do you study to try to help people, answer that question? And I know it's an impossible question to answer. I'm going to ask it anyway.
Yeah, it is an impossible question. After 33 years, I still struggle being able to answer that. We have a great secondary marketing team at Rate, and so they keep us updated daily with great backstory and news on what they expect the trend to be. With that said, none of us really knows. But I think the expectation is with all that's going on with tariffs and so forth, that we really do think that we'll see a small potential recession if things hold true and the tariffs continue to play out the way it seems they're currently playing out. So I think everybody's pretty bullish on rates probably coming down just a little bit more. But it's just so hard to say. Rates, like you spoke to earlier, kissed 6 a while back and it shot right back up. I mean, because something changed and boom, there we were. There's still so much mixed data. There's still data that points towards inflation, and then other data that points to things weakening. So it's just really kind of a tough call.
Donna, in your 33 years of experience, do you find that the rate at which rates change and the speed and the level they do is much faster or more extreme than it used to be 15, 20, 30 years ago?
No, not necessarily. Every environment is different. And I think this, in my 33 years, is an environment I haven't lived through yet. Like, this is a different thing that's happening currently.
Right.
That may cause rates to recede a bit. And I think every time rates have gone down, there's been different reasons. There's been some thing happening in that moment that caused it to happen that was a little different than the time before. So it's just.
Isn't it interesting what levers, what were you saying about the bond market? Because, we had a little sell-off, or a big sell-off, whatever you want to call it, in the stock market.
Yeah.
So people do what? I mean, what happens to all that money?
Yeah, I don't know. The uncertainty causes people to, kind of pull out of stocks and move. It's kind of a flight to safety into bonds. It causes rates to then drop a bit because everybody's pushing into bonds. It's interesting. The reaction has been a little bit different this past couple weeks, in that, I think the markets are expecting, or at least maybe lenders and servicers of loans are expecting, rates to maybe come down a bit more. So there's concern that there's going to be some early payoff of mortgages that were recently originated. So some lenders' rates aren't coming down as fast as others.
Okay.
For that reason.
Okay.
So there's some disparity between how that's all kind of
interesting.
Yeah.
So let me make sure I understand. They're holding their rates a little bit higher because they just put it at 7. They don't want to really drop it to 6.5.
There's going to be potentially cost to them if they drop too much and their servicing portfolio gets paid off faster than they would have liked to see. That's costly. They might effectively hold their rates in a place where others might have gone down maybe 0.25%.
So this has come up for me recently, and just because I'm in it every day, I haven't really thought about it. But in your business, and you can't buy a house with a mortgage without getting fire insurance. What has changed there, and is it as bad as you hear? How would you describe it now in terms of fire insurance securing a loan so you can secure a house?
For sure, it's still more expensive than it was or has been over time. And I think still taking a little more time to get insurance policies in place. I think, the news has spread and people are more aware of that. And so they're shopping earlier in the process for homeowners insurance, which is super important. They're doing a lot more shopping for homeowners insurance. So comparing quotes from company to company. I really like referring clients to brokers of insurance because I think they have a handful more options rather than just going to a company.
Right.
But sometimes there's benefit in also calling a company that only provides their insurance. So anyway, it's I think people have come around and are understanding that the insurance market's been challenging, so they're being a little more proactive in how they're approaching it.
So you've noticed what we notice is not as big as an obstacle or a slowdown because people are ready and the system's kind of adjusted a little bit.
Seems like
to
it
the
has a little
current.
bit. Still more expensive than it was.
Oh, no, there's no doubt.
Yeah.
That's not
Yeah.
changed.
The cost of homeowners insurance in California has been in the bottom third of the country. We've been lucky in this state in terms of being a consumer as to what we pay. I don't think that luck is going to continue. I think our rates are going to go up because they should, because rate is set by risk. And our risks in California are now approaching Colorado, Texas, Florida. Texas has a rate of 2 to 3 times what we have. Florida's 3 to 4 times what we have. So our rate's going to move towards those. And they should, even though we don't like to hear that.
Does the cost, because our home values and probably our construction costs are definitely higher than Florida, Texas, those states.
I would say that's true.
You own expensive real estate, so if you have a claim, it's going to be expensive to get it fixed. Yeah, okay, that adds up.
I mean, I think I shared this a few weeks ago, right after the tragic fires in Southern California. I called the builder, and we built our house 6 years ago, and I just asked him, I go, hey, you know, how much more would it cost me to rebuild the house today than 6 years ago? And he said 40%. And that 40% is if I had an individual fire. My house burned down, but nobody else's did.
So 40% more than
6 years ago.
But you came in so under budget when you built it, right?
Oh,
so,
yeah.
So you'd be even?
Yeah.
Okay.
We were a little bit over budget.
House
Just
building.
a little bit.
House building. Yeah.
Well, I know one thing we did when we heard about all that and some of the challenges with insurance is we reevaluated all the insurance we have on property and bumped up some of it, because we realized we were undercovered because the replacement cost was less when we obtained the insurance to begin with. So we kind of decided to go back through and make sure we had everything in order that way. Make sure our trust was on our insurance policies, all those things, so that we wouldn't have any issue.
There are lots of levels to the insurance crisis we face in California, and you bring up one of them that isn't discussed very often, and that's underinsurance.
Yeah.
How many people in Southern California are going to have enough insurance to rebuild their homes, even if they can get through all the hurdles that are in front of them?
Yeah, we all want a deal, and we all don't want to pay a lot for insurance, but at the same time, what an awful place to be if you don't have enough coverage to rebuild your home.
Have as much coverage as you can afford on the top end, meaning the building amount, and then carry the biggest deductible you can on the other end, so that you use the savings on the deductible to buy more coverage. Because it'd be one thing if you're out, $200,000, $300,000, $400,000, $500,000 when you go to rebuild, versus maybe being out 10 or 15 or 20,000.
Exactly. Yeah.
You talked about explaining to buyers the tax advantages of, and how that benefits them. Any other things that our listeners that maybe aren't as familiar with mortgages, because you do it every day, so you're used to it, but either mistakes, misconceptions, things that really help people that they're not aware of? Anything else people should know about?
Funny you should ask that. This is mortgage related, but a little bit to the side. For whatever reason, recently, a lot of clients, newer home buyers, they always have questions about property taxes and supplemental taxes and things like that. And this time of year, those questions come up a little bit more because second installment of taxes is coming due. So it just depends on when somebody buys their home and the whole thing. But one of the weird things that also happens is that depending on when somebody buys their home and whether or not they're in between that first installment and second installment cycle of paying taxes, they don't realize, like, let's say somebody bought right after the first installment was due, that got paid through their close of escrow, maybe by the seller, maybe partly by them. They don't realize that nobody's going to send them a second installment tax bill because the county assessor's slow at that.
Right.
So they don't ever get a bill, and they don't realize they have to pay it.
Yep.
And nobody thinks to tell them that might happen. We just don't, with all the different little parts that you're talking about with clients, I'm talking about with clients. And that's come up about 3 times in the last month, I would say, because second installment's coming due. And people have called and said, shouldn't I be getting something? And so I have to walk them through and show them how to get on the county website to pull up their bill, which is still in the seller's name
Right.
because it was issued with the, you know what I'm saying? So
And it goes to the seller.
and it goes to the seller. They're
Yeah.
never getting the bill. But they're still responsible for it.
Yeah.
Right.
By the way, they're going to catch you one of these days. They'll
they
catch
are.
up with you.
And you're going to have a penalty and all the
Penalties, yeah,
things.
and
So,
interest and-
yeah, so that's kind of a weird one that's been coming up.
So what are those date ranges when someone should be hyper-focused on missing out? Is that
First installment of tax comes due October 1st, is not late until December 10th.
no darn full?
And then the second installment comes due February 1st and is not late until April
Next
10th.
week. Yeah.
Yeah. Yeah.
Got mine ready to mail.
Yeah.
Okay, so if you closed escrow, let's figure this out, sometime November, December last year, and
Yep.
between now and then, you better be ready to pay a tax bill.
Pay a tax bill. Yeah. Yeah.
We tell the sellers when that tax bill comes, you don't have to pay it. You paid it current. Send it to us, and we'll get it to the buyer.
Yeah, exactly.
But we also need to let the buyers know, hey, if you haven't seen a tax bill, it's time to grab it.
You need to proactively look
Yeah.
for your tax bill.
And most likely, I hate to say this, don't get used to that tax bill.
Correct.
Because they probably have a higher
Supplemental
tax.
taxes are coming.
Yeah,
Yep,
higher
that's
tax
a
on the
whole
money.
nother
Oh, this
story.
is great. It's so things to be aware of. That's really
Yep.
helpful. Thank you.
I have another question for you, Donna. Based on what the CEO of Keller Williams said recently to us, he said the number of people who are turned down, I don't know what the right wording would be for a loan, is higher today.
Didn't get qualified or whatever. Yeah, it's like 20 or 30%.
The number of
rejected.
applicants, percentage-wise, that are turned down is higher than he's
Bumped
seen
up
it.
here in
Have
this
you seen
first
that?
quarter.
I don't know why that would be. I
Right,
don't know if it's
that's
because I've been
exactly.
doing this forever and maybe
Yeah.
the people I'm working with are seasoned and I don't know. We know how to kind of vet things out before,
And he
I
didn't
don't-
know either if it was income related or credit score related.
Yeah.
or- he just shared that, and I
And no one could explain why. I mean,
Yeah.
it could be, people trying job changes. That's no one really
Yeah.
knows. But
I mean,
he's a geek when it comes to the number. We like it,
Yeah.
But sometimes it's like, well, what does this mean for the public?
I do a lot of work in the below market housing space. So affordable housing, the cities, counties sometimes have affordable housing. And so a buyer seeking that type of housing, there would definitely be a lot more applicants who don't qualify, who apply,
Right.
but
Right.
don't qualify. They're hopeful that they'll qualify
Right.
and are unable to. So in that space in particular, I see that, but I wouldn't say broadly.
do you get any kind of a report on average credit scores? Are they moving up, going down in this environment? Do you know?
I'm super fortunate. Most of the clients I see, and I think maybe that's just more indicative of the area that we're in, but I think the average scores are well above 700, which is probably a higher average than it would be nationwide.
Okay.
Yeah.
And again, it depends on the buyer and the buyer space.
And where do you have to be to get the best rate?
Oh, it's different with
Okay.
conforming
With
loans.
you, right? Getting your loan with you. That's how you get the best.
Yeah,
rate.
sure,
Okay, good.
yeah.
That's the answer.
Yeah, so it depends on the investor. So, it just depends on the investor. So for conforming loans, over 760 is the best
Okay.
possible scenario, but not a ton of people are in the over 760 range.
And do you counsel people on, are there things that someone could do in the short term to really jack up their credit score?
Yeah, I mean, if they're carrying any level of debt, if they have revolving debt, making sure their balances are, no more and no less than 50% of the outstanding limit of their credit card. It's so weird, everybody's credit profile is different. And so there's different strategies to help people get their score up. But one of the most common is people who have credit cards, especially young people, may not have a high limit. So maybe they have a $1,500 limit and they have a $1,000 balance on their credit card.
That
and
doesn't look good, huh?
It's pretty wild. It doesn't seem like a lot of debt to me, honestly,
Yeah.
because I see it all. But if they paid it down to 50% or less of the outstanding limit, they often, that can have a weird and pretty dramatic effect in score. So it just, there's little strategies like that.
Well, Donna, if people want to reach you, what do you have a phone number, website, all those sorts of things? I hope so, right?
Website is rate.com/teamslo. And our best email for the team is teamslo@rate.com. Pretty
SLO.
easy.
Yep.
Teamslo, SLO at
Okay.
rate.com.
I
Yep.
like it.
And rate is a new name for your company? Because last time we visited with you, you had a different name, huh?
I know it was guaranteed rate, and apparently we don't guarantee the rate anymore.
I don't blame you.
It's just rate.
I guarantee you'll get a rate.
Yeah, exactly.
Yeah, good. Thank you very much,
Yeah,
Donna.
of
That was
course.
super helpful.
Yeah, not a problem.
Great.
Awesome. Thank you again so much. And thank you for the question. The name was
Morgan. Yes.
Morgan, thank you so much.
Message.
So anybody else, as always, you can call into the office. If you have questions, you can get on the old interweb and do the email thing. You're welcome to do that as well. Please follow us on YouTube, Instagram, TikTok, Facebook. You got us everywhere on that.
You don't know the office number, do you? You're a techie.
781-3750, that one?
Yeah. There we go.
It'd be great if Morgan had called 805-371.
Yeah.
781-3750. I tried to say it too fast.
Call right now.
I did.
Say it again, Hal.
781-3750, area code 805.
He says it 50 times a day every morning before 12, I'm sure. So, with his prospecting. There's a beeper going off. That means it's time.
Yeah, the eggs are ready. Thank you.
Mr. Kingman, what do you have for us?
I don't want to just get a voicemail randomly to my email. There's a special number that you
There is a special podcast number that we did put out for it. The 781-3750, obviously that's our office number.
244-1170.
Yeah. 805-244-1170.
So that's
what
where
it
you
is.
call in instead of the office.
Specifically for the podcast. I think you can text it as well.
805
it'll probably go 244-1170.
1170.
Yeah, so don't prank call us. Give us a serious question, and we'll have amazing guests come and help answer their questions. So thank you so much again, Donna.
Awesome.
All right, everybody, thank you so much, and we will chat with everyone next week.
You can have your question featured on an episode of the SLO County Real Estate Podcast by texting it to 805-244-1170. That's 805-244-1170. Or if you'd like to have a conversation with the team about your unique situation, call Team Sweasey at 805-781-3750. And you can always email Hal at hal@teamswazy.com for any questions you might have about real estate. The SLO County Real Estate Podcast is a production of AGM Podcasts. Get the latest episode by subscribing wherever you get your podcasts or subscribing to the YouTube channel. California DRE 01111 911.